Sarah Kunst of Cleo Capital writing, tech isn't a monolith, and that's even more true in semi and AI exposed names. This week, we'll see if they move in a block or on their own merits. Sarah joins us now for more. Sarah, this morning at least, moving on a block and really setting the tone is South Korea once again. Sarah, how key is that trade in South Korea across just two names for the global tech trade?
It does seem like it's the story right now. And the ironic thing here is that sell-off you're seeing, particularly in SK Hynix today in Korea, you pull back and you look at the one-year chart and they're up something like plus 500%, right? So wanting to lock in a little bit of those gains as all of that exposure that had been maybe from the US, through indexes, through some of those more synthetic trades, or just from people sitting in the US who found a way to buy in Korea, now they can buy in the US. And we know that those valuations tend to be higher, so they're likely going to do that. So I don't see this sell-off as a huge problem. Now I just need the entire rest of the market to agree with me.
We'll see if that changes as we get closer to the opening bell, Sarah. We can reflect on Friday as well. Fantastic demand for a record issue by a foreign company, equity issue here in the United States. Sarah, what was your reaction to the amount of people that just welcomed that supply with open arms?
I wasn't surprised. I think that Asia has taught the market over the last couple years with Taiwan Semiconductor, which is one of my favorite names, as well as obviously a lot of the exposure that you have to fabs and the entire ecosystem there, that, hey, you want to track this, and if you can buy in, you should. We know that historically South Korean companies do trade at a little bit of a discount, so it's not shocking to me that there was a feeling that there is value here, that maybe this is a better priced way into some of these AI and semi positions versus, Taiwan Semi's had a monster couple of years. NVIDIA, obviously, everybody in the US feels like they have already been kind of fully bought. And so I think people were really excited to bring in new names to buy.
When it comes to memory chip shortages, the SK Hynix CEO caught up with Ed Ludlow and said it'll probably persist beyond 2030. Do you agree, Sarah?
I think the question is going to be demand. Yes, right. If the demand continues to follow kind of the current trajectory, there will be sort of behind. Keep in mind, it's not bad for them necessarily to have a shortage, because it means people are willing to pay more to lock in orders further in advance. It means that their businesses are healthier, but certainly they are trying to produce more as quickly as they can, which is slow. The real question is, does the demand stay? We know that companies are looking at their bills from the Anthropics and OpenAIs of the world, wanting to tone that down, capping usage. The leaderboards are going away that were ubiquitous a couple months ago. And then on the flip side, we know that Anthropic and OpenAI and SpaceX and all of these AI names are also kind of looking at their P&Ls going, oh, wow, this is insanely expensive to let everybody make a cat video of their cat that died 20 years ago 10 times in a row and not post it anywhere and not pay us for it.
Well, when you say it's all about demand, a few weeks ago, I remember, of course, Apple having to raise prices because of the memory shortage. At some point, will demand destruction solve this problem?
I don't know that demand destruction on price will, unless the OpenAIs and the Anthropics of the world massively raise prices so that you're actually paying what you spend. A lot of people have been likening it to kind of the Ubers of the world. You used to be able to basically go across the country in an Uber Black for $10, right? And then the VCs and the public market said, hey, maybe you should pay what this actually costs. The prices went up, and they still have a healthy business, but it did change sort of how people value it and how people think about usage. So I do think we will eventually see something similar with the Neo Labs, but then you also have to remember that the Metas and the Googles of the world have tremendous amounts of cash, and so they do make money already, so they can actually afford to sort of subsidize our AI use for longer. And so I do think there's a really big question, especially when you pull back and remember that for the most part, we don't actually know what month over month or weekly users look like for most of these AI labs.
They are increasingly turning to the debt market to raise capital, though, Sarah. I think it's interesting to see how the warm welcome that we received, that SK Hynix received for the equity issue, wasn't really reflected in the Amazon debt issue earlier in the week. Just raises questions. I'm not saying that we're getting a full-throated pushback by capital markets on the fixed income side, but just the fixed income message, for me at least, was if you want to issue here, you're going to have to pay up. Sarah, did you see the same thing in the Amazon debt issue last week?
Yeah, I think that the debt piece of it has not gotten the same warm reception. One, I think that it certainly doesn't have as much retail and Main Street exposure as the equity does. And two, I think that people are starting to really dig in and say, wait, why do you need this money, right? If this is going to work so well, is there something that we don't understand that you do that makes you want debt instead of just relying on your cash flows, instead of relying on the equity? And so overall, the debt buyer has been much more cautious than the equity buyer.
Sarah Kunst of Cleo Capital. Sarah, thank you. Appreciate it.